Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about AUDNZD because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see by zooming out is that we are currently moving in a range. The bottom of the range is defined by these lows, and the top of the range is defined by these highs that we see here and that the market has printed so far. And what we can see is that at the moment we are approaching the top of the range, from which what we could expect is a rejection to the downside. We can also see how we are pretty much overextended to the upside at this point, with the market printing a massive impulse to the upside that lasted quite a few months at this point. And after a move like this, we could expect a correction because no market just goes straight up. Every market during the move to the upside will provide most of the times many corrections. If we drop down on the weekly time frame, what we can see is that at the moment, from a weekly perspective, after the start of this impulse, which was quite strong, we are now starting to decelerate, with the market creating this ascending triangle formation. Now, when you see a pattern like this, it usually means that bulls are losing their momentum, and at some point, sellers will come back into this market to push it lower. And given the patterns that we have already seen on the monthly time frame, this could definitely be the case around this area. Now, we can also notice how the previous high was exactly here when the market created with this candle this long wick, indicating that this area is a strong supply zone that at the moment we are once again testing, and from which we could create a potential rejection lower. Now, if we go down on the daily time frame, what do we see? From a daily perspective, we can see how this market has just printed in overextended W formation. Now, in general, after the creation of an overextended W, what you would expect is for the market to create a rejection to the downside to go and retrace at least the 0.32 of the Fibonacci taken on the daily impulse. Now, in this case, the daily impulse is from this low to this high. So what we would expect in a situation like this is for the market to provide a correction at least to this 0.32 of the Fibonacci taken on the daily impulse, which at the moment would be lining up at this area. So what we would have here is a potential short-term shorting opportunity back down to the 0.32. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, we can see how with the last reports on the AUD, we had many shorts added, 4.8k shorts added with the last report, continuing to decrease the net positions. So the AUD is starting to get bearish from an institutional perspective with way more shorts than longs, 88k shorts compared to only 28k longs. And if we go and see what we have on the NZD, the NZD is starting to get quite strong, going from a negative net positioning with more shorts than longs, 32k shorts compared to only 12.3k longs, to now having a positive net positioning with more longs than shorts. So completely the opposite, with an extra 200 longs almost added with the last report and 1.8k shorts getting closed. So the NZD is getting strong, the AUD is getting weak, and a weak AUD and strong NZD is exactly what we need if the market is to provide this potential rejection lower. So how we could be approaching this potential move to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the market to go all the way down to the 0.32 of the Fibonacci taken on the daily impulse. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire course with all the rules of the strategies, and you also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software that we used in this precise analysis, and also the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running as a massive promotion in which you have the possibility to join for 97 euros. And since I have partnered with the Forex broker Blueberry Markets, you also have the possibility to get a full refund if you open an account with them, credited back in your trading account. And if you scroll down, you can see that here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.